It's about that time of day again. My name is Joseph. Tuesday evening, February the 6th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and the euro this evening. Crude is range bound ahead of the weekly inventory report. So my plan is to fade those breakouts. Buy low, sell high, and don't fiddle with the middle on Wednesday morning. Speaking of Wednesday morning, about the S&P is bullish with a multiple spike in channel patterns on the chart tonight, both of which tell me to focus on buying opportunities down at the lows tomorrow. Nasdaq is also bullish with a big spike in channel pattern that tells me to look for buying opportunities using traps below prior swing support levels tomorrow. Gold is bearish with 3 strong legs lower, and that tells me to look for selling opportunities, but after a 2-legged correction tomorrow morning. And of course, wrapping up tonight on the euro is bearish and setting up for rotation back down to the low of a nice wide channel. But the strength of this recent move higher is too strong to sell now. It tells me to wait for the 2-try rule for the most reliable selling opportunities on the euro tomorrow. Got a great newsletter in store for you guys and gals. We got the Emini markets trying to rebound from the bloodbath earlier on this week. We've got gold and a nice strong trend. We've got the euro, right, looking at a beautiful channel rotation. And we're going to batten down the hatches. We got some big news tomorrow coming out on the oil markets. I got a great nightly newsletter in store for you guys and gals tonight. We're going to put this plan together in just a few moments. But don't forget, if you're on YouTube right now, please don't forget to subscribe to the YouTube channel. That way you never miss another video here on our blog. And don't forget, if you want to stay in tune with everything we do here at School of Trade, dig into the description of that YouTube video, follow that link over here to the blog at Sideways Markets, and come join me here on the blog. While you're here, don't forget, join the mailing list. I'll send you an email every evening when something goes live here at School of Trade. Don't forget to follow me on social. I'm always posting important charts, links, and updates that you won't find anywhere else. StockTwits, Twitter, Facebook, LinkedIn. Follow me on social for exclusive updates throughout the week. And how about this? Speaking of charts, all the charts from tonight's video, you can find them on this website. Right where it says click here to download today's charts. You can download all the charts from tonight's video, have them on your computer for tomorrow, right? No better way to get locked and loaded for tomorrow's session. Grab those charts for tomorrow. And speaking of tomorrow, what are you waiting for? Grab that free pass. Come out and join me as a guest in the trade room here this week. That free pass, you'll learn more on that free pass than you will anywhere else on the interwebs. I can guarantee you that. And if you have any questions here tonight about anything we cover here tonight in the video, you can use the live support tool on the right-hand side of the website, or don't be afraid to post your comments below the YouTube video. Looking good. Let's jump right in here. We got a busy day here for tomorrow. A lot to talk about here tonight. But looking at the calendar here, first of all, tonight, you'll notice there's really not much on the calendar here for tomorrow. I always like to make sure I check the calendar the night before, just so I know what times of the day I need to be expecting increased volatility. As you can see, there's not much, nothing here in the overnight session. Nothing here nothing here really in London. We got the home price index from Great Britain at 330, but I doubt that's going to be too big of a market moving event. So we have to literally go all the way till 10:30 Eastern time before we really run into any major news tomorrow. We may, of course, continue to see some fireworks coming out of the E-minis. You know, we saw that big bloodbath earlier, or starting last Friday, right, but then continuing yesterday. And so we definitely might see some extra volatility because of that tomorrow, but there is no major news on the schedule. We'll grab a look at the charts here in a moment. If you're a crude oil trader, though, tomorrow, right, your number tomorrow is 10:30 a.m. Eastern time. Now, don't forget, if you're trading oil, my strategy for Wednesday is inventory day. This is the biggest news of the week. Now, I know it's tempting to want to trade that news, but remember, once you get some experience, you're going to begin to realize that economic news is really just noise. It's unpredictable, it's illiquid, and frankly, it's dangerous, right? Because oftentimes, right, those reactions to the news are nothing but fuel from gambling, right, and speculators, and it's very difficult to use the same patterns that you would trade normally, right, during that news. news. So my personal opinion, I stay away from those major news events. I will trade until about 10 o'clock, 10:15 tomorrow morning. Let that news come out at 10:30. And then it's all about seeing kind of how the personality looks after that news comes out. Sometimes the personality is great after the news comes out. Sometimes it's a little bit too volatile to really handle. Remember, we like volatility, but too much volatility, right, is too difficult to manage the risk. We saw a good example of that today on the E-minis. So 10 o'clock is a good round number tomorrow for all you oil traders. And then after 10:30, we'll see if we get some reliable price action, and we'll trade from 10:30, or let's just say 10:40, into the close at 2:30 p.m. Eastern time. Don't forget, we're going to be in our trade room tomorrow morning trading this strategy with all of our advanced members. I got a free pass out there on the website for you guys if you want to come out and join me. Let's jump right in. Big session here setting up for tomorrow. We got a lot to cover here tonight. We'll go crude oil, S&P, Nasdaq, gold, and of course, can't forget about the mighty euro. Starting off here with the black gold, the Texas T, the crude oil futures. CL is range bound ahead of tomorrow's weekly inventory report. This tells me to focus on fading breakouts using the 2-try rule. That means sell the high, buy the low, and don't fiddle with the middle, right? Stay out of the middle. Now, don't forget, the news is published at 10:30 a.m. Eastern Time tomorrow, and my cutoff is just around 10 a.m. Eastern Time. So time is pretty tight tomorrow. Get to it early, step aside during that news, and then wait to see if the reaction is tradable right into the close at 2:30 p.m. Eastern Time. Now, the first thing that stands out here, as you can see, we are chopping right around that prior week low at 63.67. Now, if you've got experience on oil, this number 63.67, it's not just last week's low. We chopped around there all week last week. So this is a really comfortable area here for oil traders. Now, when it comes to finding a range, right, it's all about range rotation. So low to high, high to low, low to high, high to low, and of course now back up from that low up to that high, right? I want to use that range to identify rotation. Once I see rotation, then I know the tops and the bottoms of that range. Anytime I have a trading range, I always start looking left. I like to look at where are some of those prior swings, looking left above, looking left below. Those create my areas of interest. Now, whenever we have a range, stay away from the middle, right? One easy way to think about it is if you take the 33.3, if you take 33.3%, right, and 66.6% for all you math whizzes out there, right, 1/3 and 2/3, right, if you just simply stay away from that middle third, right, the difference there, of course, being the middle third, that will keep you out of trouble, right? So make sure you're selling above the highs, right? Make sure you're buying right down at the low. And again, measure 33 1/3 off each, right, top and bottom, and stay away from the middle. The next thing you want to do is wait for a breakout. Wait for a breakout out of that range. Now remember, the reason why there's a range is because the market is balanced. It's not a trending market. If anything, it's a bearish trend going into this range, right? You'll notice that bearish move to finish up yesterday's session, right? We had that spike in channel. What a beautiful spike in channel we had though, right? From last night's newsletter up into that battle zone, right? And then back down again. So if you were watching last night's newsletter, you were ready to capitalize on the moves for today, but we're only as good as our next trade, and so we know that we're looking at this as a range. So bear mark going down into a trading range. That means obviously if given a choice, I would choose to be a seller rather than be a buyer, but I think you'll be fine on both sides here tomorrow. So how do we trade it? 1 try, 2 try. Once we see those buyers try once to break out, once we see them try twice to break out, we call it the 2-try rule, and I'm waiting for that drop back down into that range. Go back lower. 1 try for the sellers, 2 try for the sellers. Once we see that, so sellers try once, try twice outside of the range, right? Then we start looking for those buying opportunities going back up in. You can see a good example here, right? We go down 1 try, 2 try, and then back up into that range. 1 try, two try, back down into that range, right? You can see the basic principles of that two try rule. So when it comes to a range, buy low, sell high, focus on failures, right? The term is fading the range breakouts. As price goes up, I'm looking for buyers to fail to go back down in. As price goes down, looking for sellers to fail and go back up in. Again, don't try to sell the first one, because it will probably try again. Once those buyers try again, they start failing. Now we're talking for that move back in. How do we break out? Is there a potential for a breakout tomorrow? Absolutely, because we have a big news report at 10:30 a.m. How would we break out? What does a breakout look like? Well, the first thing we look for is a strong initial break higher. That should get the moving average at the very least outside of that range. Then I look for a pullback to the moving average, and I'm looking for the second leg, right, to aggressively move higher. This is the key. When we have a strong enough move that breaks out of a range, what's really happening is the sellers who are trying to sell off this high. Remember, sellers are trying to send this back into that range, right? Those sellers need to either get run over or not even try, right? In other words, any sellers who are in the market will turn to buyers and the market will pop, right? It'll really run higher. So if we do see a breakout, you won't need my help. It'll be really clear, because that second attempt will break and run, right? What will look like is it fails, it'll go one try, two try, it'll stall out here and then come right back in, right? So that's going to be your cue to start looking for sells once we get that first try and second try back down in. Same thing, one try, two try. If that second try keeps going, then we have, right, a breakout. We'll look for our new bear channel, new sets of measured moves, and we'll use those, right, from there. Pretty simple plan. The hardest part about range-bound markets are when price sits in the middle. So stay away from that middle, fade the highs, fade the lows, and we're all right, and that's the basic principles of a range day. Don't forget about that news tomorrow at 10:30 a.m. Eastern time, because you know how it goes on inventory day. All hell will break loose there at 10:30 tomorrow, and you don't want to be caught, right, holding the bag. Let's keep going now. Over to the S&P. Boy, oh boy, what a couple days we've had. Friday we had non-farm payrolls, and even with a very strong non-farm payroll number, the market closed at its lows on Friday. Then we had, of course, this headline-making, record-breaking drop yesterday, right? People always forget we had a couple record-breaking moves higher earlier on this year too. But the bottom line is that we've had quite the bloodbath over the last 72 hours here on the E-mini. In fact, when most of us came in this morning to our desk, early middle morning here, right? Most of these markets were still in the red. It wasn't until this afternoon that we finally started peeling off kind of the break-even point around that big round number at 2,600 and started to find some light at the end of the tunnel. I know from a personal standpoint, I'm definitely cheering on these buyers right now. I'm always a big fan of the resiliency of the U.S. equity markets. From a technical standpoint, though, I'm trying to keep my emotions out of this, like we all should do, and really just trade the chart, right? Don't trade what I want to see happen. I have to, of course, trade that chart. So quite a wild ride recently, and tomorrow might be more of the same. Some of the most important lessons that we learned today was, if it's too wild, if it's too crazy, just stay away. You don't need to trade everything. We didn't even touch these E-minis today because they were all over the place, right? Jumping all over the place, right? Tomorrow, hopefully, we'll calm down a little bit and we'll get a better idea, right, of what this market wants to do. As for now, S&P looks pretty bullish to me, right, with two spike and channel patterns and a measured move target, telling me to wait for a pullback down to channel lows or show some strength to new highs tomorrow. I'm also watching this for a possible trading range environment tomorrow. We might get stuck around this big round number at 2,700. And with this strong spike into the close this afternoon, my plan is to look for buying opportunities using this as a spike and range pattern. Boy, what do we have here? There are a number of things on this chart right now. First things first, we've got a measured move, right? That measured move, you'll notice we're kind of sitting right here at that measured move. If we pull back, right? If we pull back, that next leg will be useful for another target, right? Let's just say, for example, we pull back right down to this trend line here, right? That becomes another target, right, for that measured move tomorrow. So we're going to use that to project some targets, right? Want to make sure to get that out of the way there first, okay? So you know we got that, right, that measured move. Second piece of the puzzle, well, maybe two more pieces of the puzzle. Multiple spike in channels. Nice strong move up, second leg higher, pulls back, right, and gives us buying opportunities, right, off of the low of this channel, right? You'll notice, though, this spike in channel, the first spike in channel, it just doesn't look like they care too much about it, right? We bounced off it once, twice, and you can see it kind of, right, kind of drifted off here a little bit, right? So it doesn't look like that spike in channel is really the most important thing, at least at this point, right? It might become tomorrow if we see this market jump higher. You'll also notice I'm also watching another spike in channel. I'm taking these highs, I'm projecting it down to these lows, and that really gives us a real juicy target or juicy buying opportunity here for those buyers tomorrow, right? So we got the measured move. We have the kind of the multiple of spike and channel patterns. You'll also notice here we have that big round number at 2,700, right? Oftentimes markets get a bit stuck in the mud like we did earlier today, right? So watch out for a possible trading range around that big round number. And then last but not least, kind of the last thing here on this chart is we can start to see that prior week close poke its head, right? The party's not over here for the bulls. It looks like those buyers are and again, I'm trying to trade the chart here right now, not my emotions. I'm definitely cheering on the bulls right now after such a nasty tumble Friday into Monday. But at the same time, though, anytime we start to see these major milestones kind of creep in on the top of the chart, people start to feel that FOMO, right? That fear of missing out. And a lot of times that can accelerate the move going higher here. That will obviously be a target for later on, maybe tomorrow or maybe later on this week. We'll have to see what that looks like. So measured move, obviously, that's going to be an easy target. If we don't pull back any further, that would be your next objective, right? Obviously, going through that prior week close. If we pull back, right, we'll use that for our target as well. So big round number, measured move, right? Spike in channels. We got the whole kit and caboodle here, right, on this chart here tonight. And that was the biggest challenge today, right? I got a lot of emails from people who weren't with me today in the trade room. They said, did you trade the S&P today? I said, did you look at the S&P today? Did you look at the actual chart? It was chaos, right? So very difficult to trade it today. Hopefully tomorrow we'll get, right, some better price action and we can really sink our teeth into the sucker here tomorrow. Because the S&P, I'll tell you, is one of my favorite markets for the entire year of 2018 so far. All right. So what's my plan here? Well, I think the plan really is up, down, and sideways. Yeah, I think that's your best plan here right now, right? Like we do every day. So obviously we're bullish. Let's zoom in a little bit closer here. Let's kind of put this plan together here, right? What if we go up? What if we go down? What if we go sideways? Well, let's plan the downside first. I would love to be a buyer in the very least, right? Coming off of this prior support reversal line, right? 67.25. What I would really like though is to get kind of into this little range area, right? You'll notice I'm going to draw this little range out. It's not perfect, but a lot of times when we see these little triangles or these, kind of pennants, people call them, right? A lot of times price will come right back to that point, right? And make a run back up. So that would be ideal, down around that 2640, 2630. It all depends on kind of when that happens, right? Because that will be moving higher there. So that is definitely an area of interest for me, right, on the pullback here tomorrow. And it might be a little bit chaotic. Again, it might be a little bit chaotic here as this thing pulls back, two-legged pullback, into a failure, failure into strength, strength into pullback, right, and back up we go. So we definitely may see what appears to be the sky falling in the short term, much like we saw in the overnight session in Asia last night into today's session. So that would be ideal, right? Get that nice deep pullback. What if price goes sideways here? Again, we're at a round number, and again, we're at a major level of resistance, right? This measured move. It's a little bit too much to call this resistance right now. It's not really a very strong level of resistance. Think of it this way. If I have a move up, a move down, and a move up, if I pull back off that high, this is really not very strong resistance, right? This will just push right through it, right? But if we really pull back off the high, right? See now that becomes really strong resistance. Right? So when somebody asks me, Joe, how do you know when to really worry about falling resistance? It all has to do with the pullback, right? It all has to do with that pullback. It really does, right? A lot of times we see a market that runs up, pulls back, right? Tries to retest the high, right? And then pulls off that high. How do you know when to start worrying about that falling resistance trend line? When it, right? Basically, the good rule of thumb is when it gets back down to that prior swing. Right? So once it pulls back far enough, then just by looking at it, you can easily see that trend line there. Okay, that's a kind of a good rule of thumb. So the point I'm trying to make here is this trend line right here is really just speculation right now. Right? So don't trip over that if price goes higher. Okay? What I will do though is if it pulls back, then obviously now that trend line becomes a big deal. Capiche? Okay. So now if price goes sideways here, again, this is not a very difficult trend line to work through. If we go sideways here, now we have spike into double tops, right? Spike and range. How do we trade a spike and range pattern? We look for failures. Failures with what? 2-try rule, right? 1 try, 2 try. Look for that 2-try rule and buy below that low. This will take a little bit of time off the clock, if you will, right? So if we come in here in a couple hours, a couple hours go by and we're going sideways here. In other words, we're not pulling back. We're not making new higher highs, right? We're going sideways. Then we know we're range bound. We're at resistance. We don't want to buy into that round number. We don't want to buy into that measured move. We don't want to, right? We don't want to try to buy high here, right? So to speak. We want to buy low. What if price goes higher here? This is where we have to kind of see what happens. One scenario would be it goes higher with a spike in channel, right? So if it goes higher here and we continue to kind of grind inside this spike in channel, then our job is pretty simple. Look left, right? Find some swings, traps, and go, right? It's pretty easy. If we end up, spike and channeling here, which happens a lot, guys, you'd be amazed how many times we see a spike and channel into a spike and channel, into a spike and channel, right? It's just when a market's moving like that, as chaotic as it was today, when a market moves like that, it usually just continues moving like that, right? It's just kind of weird how the markets work like that. So if it does spike and channel higher here, then we know what the plan is for that. If it just runs, right? If we start running higher, we have a good idea of where we're trying to get to, right? That prior week close. We also have the top of that channel. Although the top of that channel, like I said earlier, I don't think the top of that channel is going to be that big of a deal. I think the biggest challenge here is going to be if it just runs, right? If it just runs higher here, you know what they're hunting for. So really at that point, you can try to find a hidden channel, right, and look for a pullback there. That would obviously be ideal, right? Once it pulls back, right, kind of mark up those highs, bring it down to that low. Obviously, I'm speculating right now. We'll have to wait and see when we get there, right? That would be great if we do, but we may only get, right, a little trap here. It may just get a little trap low, right, and then the buy back up from there. So the reality is, if it just sprints going higher here, you know what I said earlier, right? Once we start seeing, I'm telling you, once U.S. traders, or once global traders really, once they start to see, wait a second, this may not be the end of the world like everyone wants to think right now, I better buy this because we're going back to retail. That's the psychology that's going to come in, and you're going to have a lot of traders that they're not going to wait for the pullback. They're going to jump in now because they're going to think. Again, I'm not saying it's going to happen, but I'm saying that's the psychology that will really quickly creep into the market as people start to fear, right, missing out on this move. So right now, it's a waiting game, right? Sit in those hands, right? If you want something to do, go watch that SpaceX launch. Do you see that Falcon Heavy? Go to YouTube and watch this. I put it on my Facebook page this afternoon too. The most insane thing I've seen in probably a decade. That Falcon Heavy spacecraft launch. While you're waiting to figure the S&P out, while waiting to see what happens, right? Go watch Musk and company. They killed it with that rocket launch. I couldn't believe it. Coolest thing I had ever seen. If they're that good with rockets, man, they'll have no problem, right, banging up the dents in these self-driving cars. I'm getting ahead of myself, though. But you got to check that out, though, on YouTube. It's on my Facebook page. Incredible work from SpaceX. And I'll tell you, I haven't been the biggest Elon Musk fan over the years. Personally, I think he's a lot of hype. I've never been too impressed by the Tesla cars either. But that space shuttle launch, holy Christmas! You have no pulse if that doesn't kind of raise your heartbeat a little bit. All right, let's keep going. I'm getting too far ahead of myself. Back on track here, Joe. Nasdaq. Over to the Nasdaq here. This one looks a lot cleaner. Now, this is the first time I think I've said this all decade. The Nasdaq looks cleaner than the S&P. What I mean by that is the chart patterns, right? The actual chart just looks cleaner. It's a better looking chart. The S&P was just chaos today. Nasdaq, though, clearly bullish. Another spiking channel, right? Love those spiking channels. And trading into a measured move, right? Measured move is resistance. This tells me we should see some profit taking here, right? And we'll look for buying opportunities down to the low of that channel tomorrow morning. We can also see the prior week closing price. It's knocking on the door right there. You see how it starts to poke its head? Yeah, once we start seeing that closing price, again, it's not the closing price. It's just this is where we left off on Friday. Right, that 53 and a quarter area, that's where the market literally closed on Friday. So that's the next rung up the ladder to be able to dig themselves out of this, multi-day, kind of bloodbath, as I've been calling it, right? Pardon the term. So we can also see, right? So again, that prior week close, right? This could really just escalate things as this market kind of roars higher, right? Kind of runs higher. So really right now, the plan is almost identical here to the S&P. We have of course, the measured move, right? And that measured move, one of the easy ways to do it is use a little drawing tool, measure that leg, right? Take that leg, bring it here, right? So if for example, let's just say, for example, we get a pullback, right, down to that 64.84 area, right? That then becomes your target for tomorrow. See how that works, right? Take the first leg, there's your second leg. Once we get to the second leg, deepest part of the pullback, measure the third leg from there, okay? 3 legs happen all the time, so we are definitely well in striking distance of a third leg going higher. In all reality, you could draw it from here, right? I mean, as of right now, this is not really typical, but as of right now, that would be, right? That would be, usually to be able to rely on this type of third leg, you've got to get some sort of two-legged pullback, and then you can draw the third leg from there. But looking at it right now, though, that would be right. That would be where you calculate the deepest part of that pullback, right? You'll learn all about this stuff inside the intermediate classes, right? You're going to love that stuff. Okay, so measured move looks good. Again, strong move up, pulls back, makes a new higher high. Take these 2 highs. This is why I love spiking channels, because once you have these 2 highs, well, look here, right? You know exactly now where you're going to be buying, right? There aren't that many price patterns out there that give you such definitive location for that buy. This is why I always say, when you do this the right way, you can plan your trades and then trade your plan, right? This is not indicators telling me where to trade. This is price telling me where to trade. And ask any experienced trader, which is more important. Price wins 99.9% of the time. So we have our spiking channel, right? You'll notice we're kind of knocking on the door here up at the top of that spiking channel. This is where I start to say things are getting a little bit too high, right, to buy right now. I'd much rather be a buyer down off the lows of that channel. And that also makes sense, right? 1, 2, 3, that's usually about all we get out of a spiking channel. 1 pullback, 2 pullbacks, 3 pullbacks. The next one is probably going to be a 2-legged pullback and a little bit more of a correction than we have going on for the first 3. So that would obviously be a spot, right, to be a buyer going lower. And again, we got that prior week close. That might kind of suck this price higher here, and we may have to kind of fend for ourselves tomorrow buying on traps. So obviously, what if price goes up? What if price goes down? What if price goes sideways? Pull back, please. We'd love to get a two-legged pullback into a failure, into strength into pullback coming in. I've got my battle zone lining up down here at that 84.6 area. Would love to be a buyer right off of that low, right? Two-legged pullback, failure, and then of course pullback off of that low. Would love to be a buyer off of that low. I would also, of course, right, if price goes sideways here, right, we start seeing the market. We get some double tops right now. Again, go enjoy yourself for a few hours, come back here in the overnight session. If we're going sideways, then we can be a little bit more aggressive with it, right? Looking for that one try, two try. You'll notice I'm kind of sneaking in a bit of that triangle that we talked about on the S&P, right? Remember the S&P? If I can draw this darn thing. There you go, right? If I can draw here, remember that little triangle thing, right? Talking about on the S&P, right? That will be great to use as support as well, right? Pulling back, right, on that support level there too. So that would be great, right? If price goes sideways, we'll look for that second try, right? Two try, and look at the buy, the second try failure. And then what if price goes higher here? If price goes higher, again, keep an eye on a spike in channel. Like I said, it's pretty similar here to the S&P. If we do see spike in channels, right, don't forget, usually get that 1, 2, 3, right, but watch out for those traps, right, and buy off of that, right, and buy off of that low. All right, also possibility here for tomorrow, we may jump up to that prior week close, and that might be kind of a consolidation area to tomorrow, one try, two try, right, and buying low as well. Now remember, we started today's session with some really kind of crummy price action. A lot of jumpiness, a lot of just erratic movement because there were a lot of cooks in the kitchen, right, as we were coming out of yesterday's big drop, right? There were a lot of different types of traders. You had long-term traders, right, fund managers in the market in the overnight session last night, right? Day traders, of course. Everyone was trying to participate in the S&P and the Eminis here in the early part of today's session. I've got some buddies at the desk for a couple of big funds, and they were basically on call all night liquidating positions. And they might regret liquidating those positions if they're not careful here. But the bottom line is keep your eye out for tomorrow, right? If we come in tomorrow morning and we see the same kind of just chaos, right, that we saw in today's early morning, right, 6 o'clock to 8 o'clock, then right, the market's too jumpy, stay away, use other markets, right? Gold and euro look great. The crude will be great tomorrow, ahead of that news tomorrow. So remember, it's good to have a strategy that gives you the flexibility so that if you don't want to participate in a market that we saw on the S&P, right, just too many candlesticks, right, too much data. There was too much everything on these E-minis today, made it very, very difficult, right, to trade consistently and confidently. And those are the days when professionals, they walk away or they'll trade something else. So keep your eyes open tomorrow. And again, if you need any help with this, I'm going to be in the trade room tomorrow morning at 8 o'clock Eastern time. All right, let's get to some more markets here. How about that gold? Now, I'll tell you, for a situation where the world was supposed to be coming to an end yesterday, right? The markets are going back to zero, right? I mean, it was supposed to be the end of the world yesterday, right? From what we saw in the headlines. But sure enough, we come in this morning, and by 8 o'clock Eastern time, we see gold is just tumbling, right? Gold tumbling. Once I saw that today, I said, okay, so apparently we aren't as bad off as we think, right? Because the markets never lie, right? If there really was a systematic breakout there, I think we would have seen a lot worse today on gold, right? So make sure you keep that in mind, right? Keep it all relative. Very, very sharp pullback, but it doesn't look like it's the end of the world out there. Trade the chart. Right now, the chart, what does it tell us? It tells us gold is bearish with a channel, beautiful channel, by the way, and 3 strong legs lower. That tells me we're getting a little low, right, to be selling at this point. So my plan is to wait for selling opportunities after a 2-legged correction up in the battle zone tomorrow morning. We talked about this briefly before on the S&P, right? 1 leg, 2 leg, right, and 3 leg. You can see they finished off their measured move. Now, 4 legs. I'll tell you, 4 legs are relatively rare, but I'll tell you, we're in kind of rare territory right now. We've had some unprecedented volatility lately, so I'll tell you, rare might be common here this week. So a 4th leg lower, you can take that, right? Take that leg and use that now, for example, right? If we go end up back up in that battle zone, for example, right? Up, and then of course now you know where your 4th leg higher is or 4th leg lower is. I don't want to say we can't go any farther than 4 legs, because we definitely can. I have seen extreme conditions before. We go 5, 6, 7 legs, right? I mean, we saw extreme conditions yesterday, right, where that could have easily been, right, 3 or 4 legs yesterday, if depending on how you count it. So I'm not going to say we can't go more than 4 legs, but typically this is where we start to wait for a decent correction, because everybody's already short. Right? I mean, if you didn't see the bear market here today on gold, you probably had your eyes closed. So everyone is probably either already in short or now taking profit and waiting for price, right, to bounce back higher here. So 3 legs down. We got a beautiful channel here. Boy, we called this in the trading this morning. If you recall earlier here this morning, some excellent examples of a smaller channel at the beginning of the session today. And then, of course, if you stayed patient for that hidden channel, you were rewarded for what was pretty much the big trade of the morning here shortly after, right, 11 o'clock Eastern time. Really, really good stuff there on the gold. Now, with that, 3 legs down, anytime I'm 3 or 4 legs down, I'm always thinking 2-legged pullback, try to sell as high as possible. Right? Try to sell as high as possible. That way, right, you're not selling too low and looking for that move back down, right, to retest the low. So think about it this way, right? Possible 2-legged pullback into a failure, into strength into pullback, right, coming back down, and off we go back down to those lows, right? 2-legged pullback, that's the most aggressive, right? You've got the failure, which is a lot easier to see. It's a lot more reliable. And the most reliable, right, which you kind of, it's always a trade-off, right? I'll trade a little bit of reliability for a little bit of profit, right? You'll make a little bit less profit on that 3rd pattern, right? But it's a whole lot more reliable because the market's made its turn, right? The first pattern, oftentimes it can be difficult to draw the trend line correctly. It can be difficult to kind of pick that top, if you will. And sometimes they're so fast, they just keep going, right? So that's obviously the most difficult to get into because it requires you to draw this trend line accurately, which you'll learn in the intermediate course. Right now, once you get that done, right, then the pullback to the moving average, right? Once they fail that pullback, stops start getting run. That's a great pattern to look for tomorrow. And then once we get that stop run, we see that shoosh, right? That shush back down, that strength moving back down. Strength tells you sellers now have taken back control, and we can start looking for those sells coming off of that moving average back down to retest the high. Okay? It could also be as simple as a failure off the moving average, right? Strength, pull back, and go. So it could be as simple as that. I've got my prior swings, a beautiful reversal line there, right? So that kind of creates this battle zone for us here. The only thing I worry about here, if you look left, you'll notice, right, we're kind of pushing our way through that prior swing, right? That's the only thing that I think here could be a big concern here for us here tomorrow, what may lead to a reversal. 1 try, 2 try. How do we reverse? What would a reversal look like? It would look like this, right? Strong move up, pull back to the moving average, right? This is where the failure would be, right? If that failure doesn't fail, though, if they're successful, right, you'll notice the strength I'm drawing this, right? Strong drop, pop, right? Strong move going higher. That's that strength, pullback strength, right? When that's the case, wait for the pullback. Draw the trend line higher, find the hidden channel, and the goal is to find a way in between the bottom of that channel and that first swing. That's usually where we get the buying opportunity going higher here. All right, guys? So we're bearish right now. I want to go 1, 2 up, failure, back down, or 1, 2 reversal, right? And then hidden channel, and we're going all the way back up, right, to retest that high. It looks like gold's getting ready for something here right now in the overnight session. We're going to wait here and see as well. Over to the euro. What a gorgeous chart on this euro recently. Boy, euro is bearish and trying to rotate back down to the low of this wide bear channel. But look closely. The strength of this move higher tells me to wait for the buyers to try twice before looking for selling opportunities tomorrow morning. And I have a hidden channel support level to trade around on the way back lower tomorrow. Now, you've got to get the full surround sound on this one to really get a good look at this. Let me zoom out a little bit here, and you can definitely see, right? We've got that big, right, that big beefy channel here, right, coming off of that low. Drawn off the lows, pinned off that high, and you can see we are right in a gorgeous location here right now to be selling back down. The problem though is, right, the problem here though is that we have a very strong move higher. Right? This is no joke, right? This is no joke. Now, look back in time, right? Notice how the market here, we kind of, staggered our way higher, right? Well, still a relatively strong move higher, and you'll notice what happens, right? The buyers try to buy the pullback, right? There's an obvious point here where the buyers try to do it again. That's what you're waiting for now. This is a really strong move higher. And anytime we see a strong move in one direction, we expect the buyers to come in droves at the moving average, and they're going to at least retest that high, right? At the very most, a measured move, right? So first leg, second leg. And again, this is where those buyers could easily take control, considering especially we're coming off that prior week low. So recap, we got a bear channel. We're in a beautiful place to be selling off the high down to retest that low. I got a measured move hanging out here for a big juicy target down around that 23,150. However, bouncing off that prior week low, a rocket ship of a move going higher. I'm expecting now these buyers are going to try, right, twice to retest the high. Once, twice, see it? Once, twice to retest that high. Once I see him try twice and fail, you can see it, right? Go up. Buyers try once. They try twice. Once you see that one try, two try, watch for the signal, and you're back down below. The great part about this is that these types of trades with so much space to the downside, you can literally have a 40% winning ratio, and you're still going to watch your account grow like a freaking weed. So we know we're breaking higher here. Strong move up, pulling back, expecting it to want to go higher here. I'm watching short term, one try, two try, then failure. Give those buyers two tries, right, to retest that high. If they can't, then we go looking for that sell back down. They possibly here now could explode this thing higher here too with that much strength to the upside. So watch for that potential hidden channel, right? And again, mark up that high, right? And looking for that, again, explosiveness, right? So how do you know, right? How do you know if price goes higher here? It's all going to depend on, does this thing run? Again, it's going to be obvious, right? It'll be absolutely obvious. We'll go into the battle zone, we'll break, and we'll keep running, right? It'll be very, very clear because all of these sellers, right, who've been padding their accounts, they're going to start getting out of their positions, right, because of that strong move higher. And it's going to throw gasoline on the fire, right, going higher. So that's the plan for me right now in the euro, right? Waiting for that one try, two try, and then whoops, back down in, right? Look for the retest of that low at 23,450, and then hold a runner, get that measured move in the low of that channel, right? Waiting here as we go. What if we end up going sideways? There's potential here for a possible sideways range here. If we end up going sideways here now, your job as a seller is to buy the low, sell the high, right? Sell the high. Your job as a buyer, right? Be very, very careful here. One try, two try. You can try to buy that low down here, but it's got to be a clear, obvious trend, right? Range going sideways. Keep in mind, though, if that fails, right, you're going to have bears attacking that second try failure, and they're going to run the sucker back down. So it's really got to be a good two-try rule. I would obviously err on the side of being a seller until the bulls can take control. Boy, what a great session today. I'll tell you right now, we are as a lot of us have assumed, we are weeding out a lot of the people in the market that don't know what they're doing, right? Moves like we saw the last few days are putting a lot of traders right now on the sidelines because apparently these markets don't just go straight up all the time. So we might see a little bit more chaos tomorrow. Like I said earlier, keep your eyes open tomorrow morning. If things don't look and feel right, then sit on hands for a bit. And if you don't know what doesn't look or feel right, come out and join me as a brand new client. We get a great free trial right here on the homepage at schooloftrade.com. I'll put all the links in the description of the YouTube video. Don't forget, we have beginner, intermediate, and advanced classes. We have great flexible payment terms for our advanced membership classes, so keep in touch on that. If you have any questions, you can post those questions in the comments section below the video on YouTube, or hit me up on live support on the homepage of the website. Guys, I have taken up way too much of your valuable time. I appreciate you being here with me. Hope you had a great day today. The big day setting up for tomorrow. Tomorrow morning, 8 o'clock Eastern time in the trade room. If I don't see you there, shall we do it again? Same time, same place? I'll meet you there tomorrow night. All right, guys? Adios, amigos. Bye-bye for now.